What's up everybody, welcome back to the channel. I'm Shawn, GILL CPA with Neutron Tax, and today's video is on tax evasion. So you probably have heard the phrase tax evasion, but you probably haven't heard about tax avoidance. I'm going to talk about what those two things are and the difference. First topic here is tax evasion. So this is the willful underpayment or non-payment of taxes that you owe. This would be something like you made $10,000 in income and you decided not to report it so you don't have to pay taxes on it. You are evading taxes. Tax evasion, illegal, don't recommend, don't do that one. Another form of tax evasion would be you are faking deductions. So let's say you have a business, you made $10,000 in income, and then you just made up $9,000 worth of expenses, so you only have to pay tax on $1,000. That's also tax evasion. Don't recommend it, don't do it. Now the thing that is completely legal and what I do recommend and what you are totally entitled to do is tax avoidance. So tax avoidance is using every rule and law and loophole that is legally allowed in your favor to lower your tax bill as much as possible. The IRS does not have a problem with this. Contrary to popular belief, sometimes people will joke about, oh, I don't want to write too much stuff off because then I'll get in trouble, whatever. You're allowed to write as much stuff as you want off as long as it's legal. And I'm going to go over what some of those write-offs are in the next video. So you can probably click here to go to that video now. It might be out already. So tax avoidance is something like, think of coupons versus stealing, right? You get a coupon that if you go down to your local grocery store, you can get 2 cartons of eggs for the price of 1, right? And then you choose to not do that. You're not going to get a special benefit. You're not going to get a pat on the back from the grocery store saying, hey, we sent you a coupon to get 2 eggs for the price of 1 and you only got 1. Congratulations, here's actually a free chocolate bar or something, right? That's not going to happen. The people that get the coupon and use it are completely allowed to do that. They are getting a benefit for it. They have the same access to the information and ability to take that coupon as someone who chose not to use it, right? Now, what you don't want to do is stealing, right? You have your coupon for get 2 cartons of eggs for the price of 1, and you decide to just take a bag of chips or a candy bar and you put it in your pocket and you walk out the store. That's stealing. That's tax evasion. Tax avoidance is using the coupons, right? Another analogy would be you are driving to a new destination. You see 2 routes. One is a shortcut and one is a long route. You're not going to get any bonus points for taking the long way there. You would be smarter and better off to take the shortcut, right? Now, if you are taking the long way and you're speeding, you're doing something illegal. But it's not illegal to take the shortcut. You just can't speed, right? So that's how you should think about tax avoidance versus tax evasion, okay? You are completely allowed to write things off and take as many deductions as legally allowed to lower your taxes. The IRS does not care if you use the system the way it's supposed to be used, right? It's there for a reason. So this could be, for an example, let's say you have to buy school supplies for your kids, notebooks, paper, staples, right? And you just buy that normally, not through your business. You can't write it off. Cool. But you also could, for example, buy office supplies for your business, staplers, notebooks, binders, whatever it would be, paper, and write it off for your company, and then give your children a binder with some pens and staples and paper, and now you wrote off their school supplies, but not because you're writing off school supplies under your business, because that's not legal, right? But you're buying office supplies for your business, and you just happen to bring home a packet of paper and give it to your child who needs, whatever paper to do their homework. That's being wise, right, with how you structure deductions and things like that. That's tax avoidance. You are using the actual laws that already exist to lower your tax bill as much as possible, maximize after-tax profit legally by writing off something that you actually can write off for your business, and it has a double benefit for you, right? It's like buying a business vehicle that you make 70% business use. You're still getting to use it personally for 30% of the time, and you're getting to write off 70% of the value depending on how you structure it. This is not tax advice, but you get my point. So that's the difference. Keep that in mind when you are looking at your taxes. If you have any questions about the difference between tax evasion and tax avoidance, or you want to talk to a CPA on how to maximize your tax avoidance legally and all your deductions. There is a link in the description below to book a call with me directly, and we can go over all of that. I appreciate you watching this video. Please make sure to leave a comment if you have any questions or you enjoy the video, and give it a thumbs up and subscribe. It helps me grow the channel, and I will catch you in the next one. Peace. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.